let's move on here. A lot going on with the markets, and I'm going to bring in Daniel Creech, my buddy. What's going on, Daniel? How you doing?
What's happening, Frank? Doing well, doing well.
Well, I love this part of this segment because, one, you're right next to me, which is cool. And it's nice to talk to someone face to face, which we're going to have more people come into the office. And we're going to be doing this, I want to say, almost live. I think it's going to be, we're going to try to tape it first, and then I'd like to do live versions. But now they're going to see, which is a good thing, right, Dan? Because I don't know if you told everybody how much weight did you lose?
Yeah, I mean, well, when Frank threatened to move me back here and put me on camera, I had to get on the treadmill and stuff. So I was channeling my Joe Rogan and trying to get motivated. Yeah, I'm probably down 25-ish pounds over the last year.
Yeah, Dan looks good. It's good. I guess we work out. We help each other out. We try to eat healthy here. But I'm not going to tell Daniel he looks good because I was fat all my life. And when people tell me I look good, it kind of means that, you thought I looked like shit all my life, right?
Yeah, thanks a lot. Yeah,
so
exactly.
I'm not going to tell you that you look good.
Terrible.
You've always looked good since I know you, Daniel. Since we first interviewed you, whatever, 3 years, whatever, how long it is now. But let's get to some of this stuff because there's a lot going on in news. And let's start with Tuesday, right? I mean, you have Trump coming out, walking out of the White House, walking out of Walter Reed to the White House. And then he decided to send a tweet Tuesday around 2:30 with the market up saying, hey, no more negotiations on a new stimulus package. Basically, both sides couldn't agree to a $1.6 trillion deal. It's all or nothing. Not great news for people without jobs, people who need this money, have been significantly impacted by COVID. But now he's dialed it back a little bit, right? He's saying, hey, okay, we could send out checks right away. We might bail out the airlines. What are your thoughts on this? Because obviously it's moving the markets. We've seen, the markets move 500-600 points over the past less than 24 hours.
Yeah, what a difference about 12 hours makes, right? He knows what he's doing with that, with Twitter. I'm going to piss a lot of people off here because I know people have strong opinions on whether he should or should not be tweeting, but he's brilliant with how he uses it. And I think it was a good political chess match move because, you get the stock market down, which anybody that doesn't think Trump's going to do everything in his power to keep that market up is not paying attention, in my opinion, because he tweets about it all the time. So I think it was a good political move in the sense that now he has to put pressure on other people. And remember, I mean, politics is a game between Republicans and Democrats, and we're coming up to the election, which is exactly why he's for a standalone bill to send everybody $1,200 checks now, right before November. So, yeah, I don't think it shouldn't surprise anyone. This is the game we're in, but politically, I think it was a good move on his part.
Yeah, it's kind of funny because I told you a story from my opening when I was, with my mom in the hospital. I watched CNN and I just came in. I remember ranting to you about it. I said, can you believe this? I mean, this is like incredible. I mean, they're tearing the guy apart. There's times to do it. There's times not to do it. And they're tearing him apart for reasons because he got out of the hospital early because he took his mask off when he was outside on the balcony at the White House. How he's so irresponsible, just killing him. And you said something pretty funny to me, which I thought was, I was like, you know what, you should, I think everybody would want to hear that.
It's funny because for the listeners out there, the office talk between Frank and I gets heated in a good way often. And I gotta interrupt him every once in a while because he gets so passionate, he cares, and, and that's respectable and that's awesome. But when it comes to politics, I have to interrupt and say, Frank, you're killing me with this, man, because he keeps giving people the benefit of the doubt, and politics and politicians do not deserve the benefit of the doubt, in my opinion. They keep doing things for their own power, their own party. People are chess pieces, and that's the way that world works and operates. And, I'm not saying I'm completely right, but that's as easy to see as me as it is to sit here and look at Frank across the room right now. So, yeah, I had to stop him because he was making great points, but it's like, hey, whoa, you care way too much, man. You're giving him too much power. So politics is one of them things where you have to pay attention to, and if you can't laugh about it, it'll drive you insane. So
it's hard. You know what? This right now, you can see from my opening, is the first time I wasn't laughing about it. I try to be unbiased. It's very hard to do. But when you just see something that's not true, and there's just so many ways you can attack Trump and go after him policy wise, and just to make up crap, and it's getting worse as it goes along, where you don't even care if you get caught or if you lie right now. But it's just one of the things that really pissed me off is when I saw Pelosi, where here's a person that she's blaming Trump because of, they didn't get the stimulus passed, but yet it was on your plate for 3 months at 1.5 trillion. She just wanted the view, and she's like, well, it's all or nothing. Let me tell you about something about her, because, one is she's been in office for over 30 years. She's promised these poor people better lives for 30 years, minorities, blacks, Spanish, all these people, and hasn't delivered, right? I mean, try taking your kids for a walk after dinner in a lot of these metropolitan areas right now. Hey, New York City, Baltimore, Oakland, Chicago, New Orleans, San Francisco, Milwaukee. I can keep going and going and going here. I mean, hundreds. These places really better off today, right now, than they were 10, 20, 30 years ago. Yet, when I look at Pelosi, her net wealth is easily over $100 million, probably more closer to $125 million. What was it? Maybe $1 million or $2 million when she first came in office 30 years. Again, that's me using the most conservative estimate. So, a person that's preaching that, hey, I care about you so much, okay, you own real estate, you own partnerships, blue chip stocks, you have Apple, Facebook, you own an Apple, which is interesting. Visa, Walt Disney for decades, own a vineyard in North Carolina wine country, actually California's wine country. Just commercial real estate in her portfolio, a house in Pacific Heights worth over $20 million. For me, when I look at this, where you're keeping the rest, when you're a person, I don't care if you're Democrat or Republican, where you're saying, hey, I'm going to help you, and you had 30 years to do it and you haven't done it, but your wealth has considerably increased. What do they pay? $225, $250, $200,000 to have her position? I mean, where did this wealth come from? And to me, that's just, it's something that I have to say that really pisses me off. And I'd say it on both sides, but that's something that just really, really ticked me off this week, to see her say, oh, well, it's Trump's fault. It's not Trump. You had a deal on your plate. You just didn't accept it. You stalled for 3 months. Maybe it's just me getting a little crazy here, Daniel. Not to take stage away from you.
You're good. Isn't her husband a really good investor? Her husband is a connected fellow.
Yeah, he's like a hedge fund guy. But they made a tremendous amount of money together through this whole entire period. I mean, it wasn't like this guy was worth $100 million and, hey, she married him. No, it was, it's not like that. And he is like, yeah.
Speaking of politics and investing, who is it? Mick Mulvaney? Who's the guy that recently left the White House and is going to start a hedge fund or be a part of a hedge fund?
Yep.
So note to investors out there, pay attention to that filing. See what he's looking at.
Yeah. Connections that guy has, forget it. Holy cow.
Like going back to Hillary trading cattle futures.
Yeah. So, all right. So I wanted to get into the investing part here because we've seen the market move a lot. I've been adamant saying, guys, you should be buying. Never thought I'd say this. Small cap cyclicals. Again, I never thought I'd say those two things, but we're going to have an economy that opens up. All the statistics support it. We're going to, no matter what's going on politically after November. I'm hoping that this doesn't last too long. We'll talk about that in a minute. But, when it opens up, I think it's going to be a big opportunity to buy a lot of stocks that have been down. A lot of industries have been down. Some people don't know that because they just talk about, on the financial media programs about the stocks that are up 500%. A lot of stocks are still down 30, 40%. Banks, travel-related companies, oil-related companies, energy. I mean, there's a lot of sector. Infrastructure is still down tremendously. And once the economy opens up, these things are going to do pretty well. But one sector that you've been looking at, Daniel, is insurance. You actually gave us an insurance pick not long ago. It's done very well on Dallas Stock Club, where, we interview people, take a pick and promote it and give it out to people for that subscription, Dallas Stock Club, through a podcast. Talk about the insurance industry because there was some big news on it this week.
Yeah, and the pick was Progressive, which is just an excellent run business. They focus more on auto insurance. But the big thing that cracked this week, and a few weeks ago when I was on, I was talking about how, your big players of property and casualty, and I don't mean only property and casualty because they have, their tentacles and investments and all kinds of types of insurance. But your big dogs like Travelers and Cincinnati Financial, W.R. Berkley, et cetera, a lot of these stocks haven't participated in the huge rally back since we've seen the COVID crash because of business interruption. And long story short, I don't want to beat this dead horse too much, but a lot of companies, as you can totally understand, have gotten together and taken, their insurance companies to court to say, hey, our business was interrupted, we were shut down, so therefore we want our insurance, we want to make a claim and get some payouts to help us with rent, et cetera, et cetera. Of course, insurance companies are saying, hey, you got to have physical damage to qualify for this. So just a few days ago, I think Benzinga or somebody reported it, but a panel of judges threw out cases involving business interruption for Cincinnati Financial. It ended up popping about 5% on the day, still well below their highs. But I know this is a boring segment, or industry and sector, but insurance companies, especially property casualty, are some of the best well-run businesses around. And it's for the simple fact that they take in claims from all of us on a monthly basis, and sometimes they don't ever have to pay them out because, and I hope nobody has to, but if you don't have to make a claim on your house or autos or anything like that, then they get to keep all that money and invest it and keep all the proceeds. So the business model is excellent. Those are companies that you want to buy and hold and kind of forget about, and leave the day trading and all the fun stuff for the Zooms and everything else in the world.
No, definitely. And, we comment on sectors and stocks all the time. And, I think I expressed in this podcast, I'm pretty bullish based on just the tailwinds that we have. With more stimulus is going to come. All right. This is all nonsense. It's going to come eventually. So this is a short-term hiccup. I actually said when the market came down yesterday, I tweeted, listen, use this as a buying opportunity if you get a chance. I mean, you have the stimulus coming. You have already $6.5 trillion into the system already. Super low interest rates forever. I mean, it just promotes an equity, rally to continue for a long, long time. Now, one thing I think that we have to be concerned about, though, because you have your Biden diehards and you have your Trump diehards, right? So whatever happens November 3rd, but what happens if this stretches out, in your opinion, where you have a lot of battleground states? We saw in 2000 where, the Supreme Court had to decide who's the winner based on Florida's recount, but we could have 5 or 6 different states with recounts that could take, well into December. And in fact, it says 55% of Americans are either not too confident or not confident at all that even when you announce a winner, the results of the election will be valid. I mean, what are some of your thoughts on this? Because if that's really true, you're going to see a lot of pissed off people. You might see more protests, more uncertainty, which the markets hate. I mean, what are you putting the odds that this is happening compared to, it's just interesting how many people actually, again, this is a survey from NBC, 55% of Americans either not too confident or not all confident that the results of the election will be valid.
Well, if you could bet on chaos, I would mortgage your house because that's a lock. And it's unfortunate. I mean, I say that kind of with a smile. I don't mean that in a disrespectful way, or not that I don't take it serious. It's just how you have to kind of deal with some of these things. The big thing I fear is that I don't think it's going to be over quickly in the matter of months anyway. I mean, you could argue that there's an entire side that hasn't even accepted the election of 2016. Now, not to get too much off of a rabbit trail, but with all the BS and all the declassified information coming out from high level people about the whole Russia story and who knew and what rules did the FBI break and all this kind of stuff, that's only going to get a lot worse. Coming back to the volatility side, yeah, of course you're going to have protests, and you're going to have both sides that are going to argue until they're lawyered out. I mean, there's news reports out there that hundreds, if not thousands, when you combine hired legal assistants, consultants, and I guess just like poll and volunteers. Mm-hmm. But yeah, I mean, they're just going to try to tie up the courts as much as they can. And in the meantime, you're going to have your Facebooks and your Googles and all that, start thumbing down on everybody because they've already threatened to. Can you imagine how much fun both sides are going to have declaring a victory? I mean, for crying out, like take Florida, for example. How many tweets are going to come out that, hey, so-and-so looks like he's leading, and we're going to declare Biden, or, well, we're going to call this. It's going to go back and forth a ton, and it'll be chaos. So it'll be a ton of volatility. But I still think you could look to buying opportunities in that, because when shit hits the fan, a lot of times capital markets are going to be where, as goofy as it sounds, capital markets are where you want to put money at. So.
Yeah, and guys, I'm bringing this up for a reason, because I just wrote it's going to be a free report to everybody. So if you want it, you can go to our website. It's going to be available about a day or two. It's just getting all fixed up and nice, which I wish I could write perfect and don't need editors, but we have to hire great editors. Thank you, Stephanie. I'll give you a shout. But it's basically a report on, it's called the third option. So it's Biden, if Biden wins, or if Trump wins. I highlight the sectors that are going to do great. Of course, Trump, there is some sectors that are going to do even better, but mostly status quo. But what industries are going to be impacted the most? Which are the best? Which are the worst? But I also talk about this third option. If this happens and this lasts longer than expected, or if we do see this unrest that so many people are expecting because it's close and it's going to be called, and we do see that uncertainty, it's how to play it and how to really make a lot of money if that happens, that third option. I'm going to put this on our website, Curzio Research. Again, it's absolutely for free, guys. You just go there, click it, you're good. If you're interested. But to me, that's a big topic. I mean, we want to know how we're going to, these policies are going to impact so many different industries. People say the market's going to do well, whether it's Biden or whether it's Trump or whatever. Guys, certain sectors are not going to do well based on who gets elected again. And other sectors are going to thrive. Maybe the market as a whole, if you're looking at the S&P 500, goes up over time like it's done in a secular trend since the 50s, since it was, existed. But overall, you have to really pay attention to your allocation. There's trillions of dollars on the sideline waiting to see what happens here. It's going to be impacted significantly, but I lay out a whole thing. It's really cool, detailed analysis. Sectors, I name individual stocks. Again, I give a lot away for free because they just, for people out there, everyone's been listening to us, Daniel, for a while that knows us, trust us. But, for people who don't, this is something just to show, our type of research to get you started. It's really, really cool. You'll find lots and lots of ideas. Now, Daniel, before we go here, let's talk about, again, the insurance companies that you talked about. You did fantastic with, great call on those. What are some of the things, maybe we'll end with this, that you're looking for, that you're looking at now that interests you, or something that maybe, makes you a little bit nervous out there? And again, we talk about, different stocks and sectors and view the market almost 24/7, both of us. So, what are some of the things that scare the hell out of you, or something that you're really excited about?
Two quick topics here. Alternative energy covers both of those, both that are intriguing and scary as hell. Because if you look at take the ETF for solar, Invesco's solar portfolio, ticker is TAN, TAN. It's got big holdings such as Solar Edge, Sunrun, First Solar. But if you pull up charts on these things, I mean, they've been trending higher, and lately they have exploded straight to the upside. Another company is Bloom Energy. They're not solar; they're more of a fuel cell and alternative power. But when you see these massive moves higher, it can make it harder to pull the trigger and just sit on the sidelines. So I got to dig a lot more into that. But I just want to be open. That's definitely got my attention because I've seen some headlines across Briefing, one of the sites we use for information, and it's on the radar, and we'll do deep dives into that. The other one is just with interest rates lower for longer and the Fed pledging all that, you want to look to the biggest and best asset allocators, and you can look at big hedge funds. Disney is in the news today because Dan Loeb, respected hedge fund manager, is it Third Point? Is that who Dan Loeb is?
Third Point, yep.
Yeah. They took a big stake. They're saying that they should cut the dividend and focus on streaming, and the stock's up on that news today. But other like Carl Icahn, his Icahn Enterprises, and you can look at huge corporations with brands like Fox. Fox has no debt to worry about over the next few years, a ton of cash on their balance sheet, and they're a huge marketable name. They can get into basically anything they want. So in a low interest rate world, you want to look to those players that have access to capital. Blackstone's another one. You got some of the best investors ever, and they're going to have low hanging fruit to pick deals when money's free. So definitely put all that on your radar and look to invest and be ready to pull the trigger.
Nah, it's really good stuff. I mean, he's saying that they need to cut the dividend. They can't afford it. So, I mean, if you're really going to pay for content, and again, this content that's streaming, they're hiring the best actors, actresses. They demand, some of them $10 million plus, which Netflix is fine paying. They use their stock as currency, and that's fine. And that cash flow takes a hit. But Disney's not used to that business model. They took on a ton of debt at the absolute wrong time. Almost every single one of their segments is getting impacted. The fact they didn't put out any numbers on Mulan makes it scary. I still haven't heard anything about that. I thought that would do very well. If it did, they would have put out numbers already. You're looking at Disney parks. I said earlier in California, Disney Park is still closed. The other one's operating at 40% capacity. So, just Broadway musicals, everything across the board. Just scary times for Disney right now. So I'd be interested, how Loeb thinks they're going to change the company. And again, I want to read that thoroughly, but he's right. I mean, if they could really get into streaming and really they need the cash to get into streaming, they should cut the dividend. There's no reason why no one buys Disney for the dividend anyway. So it's now a growth company, but it's a good idea. Anyway, Daniel, thank you so much for coming on. Love sharing your insights, getting lots of positive feedback. Also, a few negatives, which are political thoughts.
Oh,
I think
keep them coming.
Yeah. And what's your email again?
Frank@CurzioResearch.com.
That's perfect. Don't worry, I'm going to forward everything to him. So keep it coming, guys. Frank@CurzioResearch.com. Thanks again, Dan, for coming on.